Good morning. Well, the commercial mortgage market that we've been talking about for the past several weeks is starting to see some of the defaults come into play. Recently, this week was just announced by Brookfield, which is one of the largest building office holders in the United States, that they've actually defaulted on their second property. And this was roughly about $161 million mortgage. And you're wondering, okay, why would they default? And this is it. Commercial mortgages are different than residential in that they're adjustable rate mortgages, and they're generally tied to either the 2-year treasury or some other benchmark such as that. So as it goes up, their payments go up. And this is the big item. That loan was actually underwritten in 2018, and their monthly mortgage payment last year was $300,000. They've actually nearly tripled their payment to $880,000 this month. So that's what we need to be concerned about with the commercial real estate mortgage. Good morning, Brenden Rendo with the Homes in Orlando team. Thanks for joining us. What we do every week is we come to you and try to bring you the economic news that's affecting real estate and showing you how it may affect us overall in the Orlando real estate area. So let's get into it a little more and let's talk about what's going on. These are some of the other headlines from this week. That we are seeing a default risk growing on $1.5 trillion in commercial real estate debt. Why is that 1.5 important? Because the commercial mortgage-backed total volume is about 4.5. So we're looking at nearly 30% of all commercial paper being at risk of default. That is multiple times more than what we saw with the residential. The residential, we actually saw I think it was about a 4% was the peak, 4.5% of all real estate mortgages. We're talking nearly 30% of all commercial paper being at risk. That's a big deal. So that's something that's overall has got to be addressed and got to be addressed quickly. So even though, and this is something I'll get into in a little bit with the Fed, and I don't agree with what they're doing. You've got investors such as Howard Marks, who's one of the top leading managers for a very large commercial real estate management company as well, warning of billions of dollars worth of possible defaults. So we've got a number of alarm bells going off, but the Fed's still sitting there going, twiddling their thumbs. And knowing that if they continue to raise rates, they continue to push the risk up of all this commercial paper going bad. Because you can't have the payments go up, occupancy rates dropping through the roof. In New York, it's roughly 40 to 50% of all office occupancy is vacant. So income is going down, but your payments going up. What are you going to do? You're going to end up being put into a situation where you're going to default on those loans. But at the same time, this morning, when we look at the Fed watch, what are people predicting? People are predicting a rate increase. I just don't see it. When you look at all these headlines, look at all this information, I don't think the Fed can do another rate increase. There's other factors going on around the world as well. 2 of the largest Japanese life insurance companies that hold hundreds of billions of dollars of U.S. treasuries announced over the past 2 weeks that they're going to start unloading these treasuries because with the currency exchange, they're losing money. Their yield is actually negative. But if they buy the yen treasuries, they can actually make a little money. So it doesn't make sense to me that the Fed would increase rates. But I and Jerome Powell have been known to disagree in the past. I'm down here with this 14% wave. So that's kind of the big news and the things that we're going to need to watch out. The commercial market still seems strong here in the Central Florida area. There's still building going on. There's still growth here in Central Florida. So that's helping us stay outside the curve. The property that they actually defaulted on was in Los Angeles. So it's something that we're going to continue to watch and see how it affects. Overall this week, though, the market had a very good week as we go through the numbers. The market stayed steady. Let me blow this up a little bit so everybody can see. And I'll move myself over here. The market continues to stay steady in the Orlando area. We saw home sales increase just a hair to 421 from 408. But the big news is right here. We actually saw inventory increase. That's been needed. The inventory had shrunk nearly 18% since the beginning of the year, and people are starting to get into those multiple offer situations again. So having that increase is great, but we need it to grow even further. We really need to see the number of homes on market get back up into that 5,000, 5,500 range for people. In the condo market, we saw nearly the same thing. Consistency, 143 this week as opposed to 136. And they also saw a small increase in inventory as well. So good news on both the home front and the condo front. When we get into looking at the numbers that we like to check every week, which is the original list price to sales price and final list price to sales price, staying consistent, very consistent, staying about that 98 mark off of final list and 95% off of original list. But the big number here again this week was days to contract. We dropped nearly 7%. We went from 55 to 47 days on market. So that tells you market's heating up again, which is, again, good for the sellers. Well, let me show you graphically what the inventory has looked like since the beginning of the year. So here we are, beginning of the year, we had roughly 4,600, and you saw that continuous decrease. And this is the first uptick that we've actually had. And it kind of leveled off, but I'm hoping we've actually hit the bottom of the inventory. And this will continue to push up. If it does, it's going to help the buyers. If it stays at this level, the sellers are going to benefit because of the lack of inventory. When you go on and you look at the actual inventory overall, you're seeing probably about 35% of the homes that are listed are actually new homes, not resales. So when you take that volume out, you're actually looking at a much lower overall resale home volume than what we're seeing this number represent overall. Condo market, very similar, holding at that 97.5%, 98% range and 95% to the original sales price. And their days on market actually creeped up a little bit, which was kind of interesting. So opposite ends of the overall market. So that's a quick recap. Hope you enjoyed it. And thank you for joining us today on the Orlando Real Estate Buzz, our weekly podcast. Please, if you enjoy it, please come back every week, hit the like and subscribe button, and we'll continue to bring the Orlando housing market information to you on a weekly basis. Take care. Have a great day.